Good evening, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is April the 15th, 2013, and here is today's After the Bell Market Summary brought to you by WallStreetTrading.com. Well, folks, a lot of selling in the markets today, not including the fact that we had this crazy action with this bomb stuff go off over there in Boston. Make sure you send your praise out to those folks over there. And, it's just not good. We don't know if it's a terrorist attack right now or not, but either way, it is not good, and you definitely want to make sure you keep those folks in your prayers. In any case, let's go and take a look to see how the markets closed the session out here for the day. The Dow Jones was down 265.86 points. The Nasdaq was down 78.5 points here, and the S&P 500 was down 36.5 points. If we take a look at the breadth today, guys, we have about a 10-1 in favor of the bears, just about. Not good at all if you're leaning to the long side. All right, we had 5,612 issues declining on the NYSE, Nasdaq, and the Amex. We had 612 issues advancing on the NYSE, Nasdaq, and the Amex. So just about a 10-1 in favor of the bears. If we take a look at the new high and new low breadth, we had 235 issues making new lows on the NYSE, Nasdaq, and the Amex. We had 185 issues making new highs on the Nasdaq, NYSE, and Amex. So definitely on this side of the things as well, as far as lows and highs, we had breadth in favor of the bears on that aspect. So let's go ahead and take a look at the charts and break everything down. This is going to be a very interesting video, so make sure you watch it through the whole segment here, as I'm going to do a good analysis for you all that are watching the videos through the whole clip. So let's go ahead and start off with the SPY. SPY was down $3.68, closing down 2.32%, closing at 155.18. That key level that I've been highlighting to you all around the 157 level as a level to watch. Okay, we have broken below that level. So what does that mean? That means anybody that is long from last week Wednesday above this 156.84 level, all right, they are now in a, you got it, losing position. All right, which I like to call a bull trap. But that trap is not confirmed yet until we get another confirmation lower close. Okay, so far at the bottom of the screen here, you can see we try to break out over 156.02 earlier, or say earlier last month. Not quite sure when that is here. Let me take a look real quick. That is back here on March, right near the end of the month there. We try to break past this 156 level. We failed. Then you can see we finally got above 156 on the closing prices. Then we failed. Then we got back above 156. Then they try to, drag some believers in the market, okay, off of that gap down in the jobs number, and then rally right back up, getting everybody into the market saying, oh, they're in the market to buy the dip. So they buy the dip, and now guess what, folks? They slammed us right back down, and we're below that 156, 157 level. Not good at all, because a lot of people are trapped. So now I have the chart zoomed in on the daily chart of the SPY daily. The next support is going to be right back down here at 153.91, which I believe will get hit tomorrow. All right, that is a 50-day simple and exponential moving average. Right below that 153.91, 154 level, call it, we have the 153.22 level of support, which comes from this little pivot high that we had right here. That was acting as resistance. We broke above it, so now it's support on this side. So make sure you watch those levels. And if we were to get some more selling below that level, then you want to make sure you pay close attention to this next level right here around 152. Prior resistance should now act as support. All right, those are some nice little levels to work off of. As far as resistance goes, use that 157 level as resistance in case they do want to try to spike us back up. But I'm a seller of all rallies in the SPY as long as we hang below 156.84. All right, 157. And then the big ES candlestick, you can see here the big drop, and the S&P E-minis big drop. After today's big drop, we may consolidate a bit and then have another breakdown later on in the week. However, depending on what happens tomorrow, we could also have another small fall through day, or who knows, another big day. We have to wait and see. But the markets are getting pretty interesting now, and we nailed the market today to the short side in the My Wall Street TV trading room, and we plan on doing that going forward. As long as we continue to get this nice clean action, it should be a good week for us. I mean, today was a very good day. Just trading right off the levels and what we saw on the charts. And again, let me just do a quick little recap of what took place in the market on the smaller time frames here for those of you guys that did not get a chance to watch the midday market update. I want to take off these studies here and show you guys how the 15-minute chart is looking now that we sold off. Well, first of all, the ES has been in this nice little downward channel since last week. Thursday's breakout, Thursday overnight, Friday morning, Friday session, Sunday overnight, Sunday morning, then Monday morning right here. All right, notice how we were containing this little channel for about 3 sessions, 4 sessions, daytime sessions, nighttime sessions, overnight sessions per se. And you guys know whenever you break the bottom of a nice little downward channel, these downward channels usually resolve to the top side. But when they break the bottom of the downward channel, all right, and that usually tends to line up with the key support level, which me studying these channel analysis for the past 3 years, this analysis has not failed yet. That key level lined up with the bottom of the channel to be around 1572. A lot of stop set right here. That big sell-off, and that's what you get, folks. Then we had the news out of Boston come out, so that caused some more selling pressure on the market as people were looking for that fear trade. And, you know, the market was pretty clean to the short side. All right, now going into tomorrow, we want to see if those buyers are going to come in and buy that dip. All right, and if those sellers are going to come in and try to short those rallies. We're going to see what levels they try to, trade around, and we'll go from there. We'll trade them off those key levels. All right, and we'll have those levels posted in the chat room tomorrow morning. So you want to make sure you go to wallstreettrading.com and sign up for the 14-day free trials at the My Wall Street TV active trading room. All right, let's go ahead and take a look at the triple Qs, guys. Triple Qs, Nasdaq. Now this is getting interesting because we had this little rising bear wedge in play, correct? We talked about this rising bear wedge, breaking down on Friday, but then sucking in those shorts, all right, or those longs, I should say. Well, no, sucking in those shorts and squeezing them out, all right, and then getting the longs involved above 69, and then now squeezing them out, all right. And I highlighted this pretty clearly in the video that I put out over the weekend, all right, stating the fact that every single time we get a breakout in the triple Qs, they tend to fail. That has been happening a couple times, since the start of the year. So we broke out this little choppy range right here. We broke out, got some people convinced that we failed. All right, then we had this nice little choppy range form, and we broke out of this range and we failed. So right now, at the moment, we have people a lot of mixed emotion, guys. You can just look at the chart. There's a lot of mixed emotion, a lot of confused people out there. People got short, they got squeezed. People got long, now they're in a losing position. A lot of confusion going on here in the Qs, guys. All they're doing is chopping people up around the 68, 69 area. So when it does break and it's all over with the chop and we get that actual trend, whether it be to the top side, which I doubt it, and it breaks to the downside, we're going to be all over. We're going to be all on top of that. So you want to make sure you get involved. But again, levels to watch here on the Qs: 69. We got to get back above 69. If we break below today's lows, look for a move back towards the bottom of this highlighted range that I have right here around 68. We break below 68, then you want to look for Friday's lows that we have from the earnings gap down, which is right there around 67.19. All right, now that we're back inside this little wedge pattern right here, this rising bear wedge is back into effect here. All right, but it's really not back into effect now until we break below this trend line, which is like around 68, until we break below 68, and then really until we take out these lows right here, because a lot of people are working their stop off of this low. Then it will be time for the sell side action in the Qs, and we're probably going to see them try to trade right back down to 66.5, which lines up with this 200-day moving average. Again, and I'll be here every day doing these videos to help you guys maneuver through these markets. All right, so we're on the right side of the market here. All right. Let's see. Let's go ahead and talk about the IWM. Right, the IWM was down 3.77%. That is for the Russell 2000. IWM closed at $90.11, down $3.53, down 3.77%. This one as well, remember we were looking for that hold above 92.70. That hold did not come above 92.70. So now, as long as we continue to hold below that level, we're going to be looking to short rallies. Next support level is right down here around 89. We break below 89. Next support level is right here at 86, which also lines up with this 200-day moving average, which is this is the 200-day exponential moving average around 86.10. Also lines up with the low that we made here on the candlestick on January 1st. All right, then we also have this big gap right here, so make sure you keep that in mind. They may want to fill that gap. We'll see. But again, we'll be on top of it, and we'll be guiding you guys through it. All right, let's go and take a real quick look at the dollar. See what the dollar did today. The dollar bounced right off of that 82 level here, and so far we are holding above that key level 82. All right, so let's see what happens. We'll keep an eye on this dollar. All right, you have this nice little downtrend right here in the dollar futures, nice little downward channel. Remember, this was prior resistance, this little red shaded area. We're above it, so now it could act as support. So we have to wait and see. If this acts as support and we see a big breakout in the dollar, we're probably going to see the euro pull back. We're probably going to see the equity markets pull back, more. All right, that's inverse correlation is still in effect, of course. Strong dollar, weak markets. So let's see here. Let's take a look at the euro dollar real quick to see what the euro dollar did today. All right, euro dollar, ugly reversal candlestick here. Take off all the drawings, hide all the drawings. Ugly reversal candlestick engulfing on the euro. Pretty much gave back all of its action that it's been doing for the past 3 days or so. Euro breaks down, dollar goes up. Look for equity markets to pull right back in. A little quick snapshot of that. Now let's take a look at the volatility index. The VIX was up. Am I reading this correctly? The VIX was up 43% today on the VIX. All right, VIX up 43%, up 5.21 on the VIX. So now the volatility index, the actual VIX index, is trading at $17.27. Right? Are we going to break right back above this $19 level high that got hit when they were making, I believe, the Greek vote was going on over there overseas, the Greek vote, which caused that spike up? We'll see. I'll tell you guys one thing. Fear is starting to drift back into the markets, and you want to make sure you're managing your positions accordingly, and that you're position sizing accordingly, and that you are practicing the proper risk management for your style of trading. All right, but either way, the VIX is moving back into this little yellow shaded area that I have, which this yellow shaded area came from this little consolidation that we had back here in October. All right, this little congestion. That's why it's important. That's why it's important, and that's why it's going to be important again. Because tomorrow, with this space that we have right here left to 19, that could in fact be hit tomorrow, or we could chop around a bit and then hit it later on in the week or next week, depending on how they want to trade off of this big expansion candle that we had today. So just keep that in mind. Let's go ahead and talk a little bit about the precious metals here. Of course, precious metals got hit again today. They have been getting smashed. All right, and another fall through day today. Now, when I did the weekend review video, I was saying to watch that 1400 level, but I didn't think we would see 1350. At the same time, I'm not short gold, but I've been trying to get you guys to not get long gold for the fact that the technicals have been showing up to the sell side. If I hide all the drawings, this is not, something you want to be involved in. These precious metals are selling off. Just take a look at gold. Breaking down at this little consolidation range to the downside. Some levels to watch in gold. The next level to watch in gold really isn't down here to like around 1300, which I think could get hit by the end of the week if they continue selling gold. The next decent level support to watch on the daily chart, on the monthly chart, really isn't till like around well, if we break, guys, if we break below this 1331 level on the gold futures, next support level really isn't to like around 1250. That would be an interesting area to keep the markets to maybe try to nibble in some of these gold stocks. All right, so gold futures are looking weak. Let's take a look at the GLD, since some of you home gamers out there, of course, track the GLD to trade trade gold in your portfolio. And GLD, guys, not an area you want to be in. Just take a look at this thing getting demolished. We're talking about this thing trading at 153 mid last week, and now it's at 131. All right, GLD was down $12.64 today, down 8.78%, closing at 131. Definitely something that you do not want to get involved in. I want to show you guys the weekly and the monthly chart so you guys can see exactly how this breakdown is not looking good in gold. If you're a gold bug, I wonder what Peter Schiff is saying. Peter Schiff is probably saying, "Oh, buy the gold." I don't know. I want to see what video he comes out with, or if I want to hear his radio show that he put out today to see what he's telling his clients now that he's been getting them to buy gold. But not everybody's right all the time. So he was right earlier, and now it depends. I'm not sure if he's buying gold or not, but still, nothing works forever, guys. You got to adapt, and that is what you have to do right now with these fast revolving markets. All right. Any case, bottom of the channel on the gold weekly chart is down here, which lines up with 120. I tell you guys one thing: if GLD goes down to 120, I will be buying some call options on it. And again, I'll keep you guys posted with that. but this is definitely setting up some opportunities in the, I would say, short-term future. Okay, GOD, let's take a look at the GDX. Gold miners, they got smoked again today as well. We've been telling you guys to get short the gold miners ever since we broke below this 44 level. Even the gold miners could go all the way down to 21. If they go down to 21, folks, I will be a buyer of the GDX. In the meantime, right now, stay away from the gold miners. They do not look like the area you want to have your money invested in. And I'm pretty sure this is going to set up some type of capitulation trade to profit off of. So we'll keep you guys posted on that. Stay away from that. SLV silver breaking down. This thing, we've been looking for this on the short side ever since it broke out of this little $2 range we had right here. 27.50, 28.50. We broke down, we rallied up, they smacked it right back down, and then of course they just mollywopped it today, if that's even a word. Sounds like a wrestler word, mollywop. Any case, folks, not the name you want to be in, not the sector you want to be in. Precious metals have been getting sold, and it's because these big institutions, these firms, they're liquidating their assets, they're getting margin calls, they're getting stopped out of their positions. All the stops are getting hit from people that have been taking the gold trade long ever since it broke out 2 years ago. They're selling their positions now. At least I hope they're selling their break-even shares. I really hope they took profit the whole time it was rallying from 2010 to 2011, sold some there, and maybe try to take some off this year since they saw that it was a downtrend from 2011. So either way, precious metals are weak. Let's go and take a look at this thing we call black gold, aka crude oil. Crude oil. All right, crude oil. Let's see what this thing did here today. Of course, it was down. The whole basic material sector, commodity sector, was down today. Crude oil, another sell down, another sell day today. All right, it opened up at 90.95 and we closed at 87.39. Next support on crude oil isn't really to like around 84 half, call it maybe even 85 in this little area right here. And then maybe down there we could look for a scalp opportunity. All right, one thing that I've been mentioning here in the weekend review videos, which I didn't get the chance to show you guys in this weekend video report, was the monthly chart of crude oil. How, we were looking for a big move in crude oil going into this year. Now, based on what we see here, it looked as if we were going to break to the top side, right? But then guess what? All this news comes out, and now there's fear in the market. Now people are selling their crude oil positions, and they're a little bit, worried about economic growth. If there's no economic growth, there's going to be no need for crude oil. So now I see a new range developing on crude oil, and that comes around 85 and the say 98 area. Okay, so now it's in a range between 98 and 85. So we're talking about a $13 range here. If we break and hold below 85, we could get some nice selling pressure. Mind you, this is a monthly chart. If we break above 98 and get some buying pressure, we could trade back up towards 105. Taking a look at the weekly chart to see how everything's really setting up. It's still in a safe spot on crude oil because all we are doing right now is basically back testing this little trend line breakout again, because we already back tested it right here and rally off of it. Now, if this thing does not hold this 87 level, we got to look for the bottom of this little triangle. They get hit around 84, call it, which is the triangle on the monthlies as well. Doesn't look like it, but it is. All right, so that's that. And of course, you guys are trading the crude oil. You guys are looking at the USO. All right, and this is me giving you guys a big look at the market now, since we are getting to some, we have to take a look at the macro view on the market now with this breakdown we had today to see what levels we have to work off of. And USO looks like it wants to come down towards 31. We break below 31. Next support on USO really isn't down till around 29, folks. All right, so now we got to the good part. Let's talk about some stocks real quick. Apple, because I'm pretty sure all you guys want to hear about Apple, right? AAPL down $9.95 today. Call it 10, down 2.32%, closing at 419.85. If you take a look at this chart looks like a head and shoulders pattern. Now I know they say head and shoulders patterns can only form at the top of a trend. That is not true. They could form in the middle of a downtrend while they're making their way down. Because then, if you think about it, if we were to break down, then you would say, "Oh, well, guys, well, look, we were breaking down of a head and shoulders pattern right here. That's why we're all the way down here." Well, they do form in a downtrend as well. They don't just always form at the top of a trend. And this looks like a head and shoulders pattern with the neckline being 420. And either way, what I'm trying to say, this stock, Apple, it looks bearish. They have earnings coming out next week. This is a stock that you do not want to be in if you're on the long side. And if you're short, maybe you know, you can maybe catch a nice cash flow trade tomorrow on a break below these 420s and holds. On a break below 420 and a hold below 420, we could get some nice action here. Okay. Um, but of course, if you were looking at Apple to the short side, you better off. You would have been better off short Apple from up here. Okay. When we were saying, oh, you don't want to buy it up here because look at the distance it traveled. Amazon. Amazon was trying to show some nice little relative strength to the market last week, but got smacked down $5.15 today. Not a sector, not a stock you want to be in right now in these conditions where we could roll over. All right, because this thing's been having some trouble trying to break past its 275, and then who knows? It could be developing a new range here between 275 and 258, meaning that in the coming days here we could break down towards the bottom of the range if they want to sell this name. All right. Netflix was a high flyer today. Pulled off a bait. Sorry, pulled off a bit off of its highs, and it's having some trouble trying to break past this 180 area right here. Okay, if we hold below 180, look for this thing to try to maybe pull back in towards the 165 level. Jeez, I really got to slow down. But if you can't keep up, you gotta try to keep up. What else we got here? JP Morgan. I wanted to go over this chart with you guys for the fact that this thing looks like it's setting up a nice little head and shoulders pattern here, with the neckline being around 47. This is a nice little bull trap action we had above this breakout over 49.59. Doesn't look good. If we break below 47 and hold, we could get some nice selling pressure here. At the same time, looks like that's the short-term target on this name here, 47. All right, guys. Aside from that, don't want to make the video too long. There's a couple more things I want to go over, but I'll leave that for tomorrow morning in our live chat room. Make sure you go to wallstreettrading.com to sign up for the 14-day free trial to get to the room. Have a great night, folks. Cheers.